Gracias Luis y gracias a HP por invitarme a evento importante. Me gustaría hablar completamente en español, pero hablo un poco de español. So that's all I have. I wish I could speak more, but my high school Spanish gave me a little bit. So my job today, I think, is to step back and provide some perspective on this trend in business to talk more and more about environmental and social issues called sustainability or many other things, the really big trends, the mega trends that are driving deep change in the world, how we live, how we eat, how we get around, the technology we use, and why companies have more and more responsibility for their impacts on the world. How we've moved from talking about green to something called low carbon or carbon zero to what now I think increasingly will be net positive. And I'll talk about that. This is about companies finding a new path to profit and thriving by solving the world's problems, not by causing them. So let's step back for a minute and talk about the last couple of years. So 2 years ago, the largest companies in the US, the 200 largest companies, the CEOs all belong to something called the Business Roundtable, and HP is a member as well. And they put out a statement about the purpose of business. And what they said was, for decades, we have said that the purpose is to serve shareholders, short-term shareholder return. But now we realize that's not accurate. That's not how we operate. We are actually serving stakeholders in all that we do. It's more than just profits. And this was just a statement. The companies didn't necessarily change behavior that much, but the discussion or the rhetoric, the language matters. And they weren't the only ones. The Financial Times in Europe had put out a new website about rethinking capitalism. There were surveys showing that a majority, 84% of investors now agree that maximizing shareholder returns can't be the only goal. It doesn't mean companies won't be profitable. I believe they can be just as or more profitable, but it isn't the only thing. And that you can create value in business very much through environmental and social thinking. There are kind of 4 core ways that we create value in business. We lower cost or risk, we reduce the downsides, or we build the upsides. We drive revenue through innovation, new products, new services, or we build the very important intangible or brand value. And I could give you examples of companies creating billions of value in each of these areas, companies cutting costs through efficiency, through energy reduction, through things like using technology and computers that are Energy Star and are lowering their cost. There are companies also managing risks really aggressively, often in the food arena, dealing with the risks of climate change in their supply chain, or companies that have had some problems and run into things that cost them money in ways around managing risk in their business. Companies putting numbers on what it means to be more sustainable to their employees, to their customers, and finding that it's worth hundreds of millions of dollars. Or finally, the kind of obvious, which is selling more things that are more sustainable, either pure plays like Tesla or companies like BASF in chemicals that have ranked all their products on how much they serve the world or helping solve problems, and they are selling more and more of the ones that are sustainable. This is something that companies are figuring out over many years, that there's incredible value here. And if I had given this talk 10 or 15 years ago, I would really spend most of my time on that discussion, on here's 4 buckets of value. But the world has been moving on, and that's almost table stakes or a given. And we now have a world where in the last 2 years, there's been more change in what it means to be a business or what's expected of business than in the previous 20. We live in a world that some call VUCA for volatile, uncertain, complex, ambiguous. All of that means we don't know exactly what's going to happen. Things change very rapidly. A pandemic was not totally unpredictable, it was something many people were talking about, but the level of challenge it's brought to the world and change has been surprising. But we are facing, outside of things like a pandemic, three really big, grand challenges. And they boil down to kind of one, economic reality, and two, biophysical issues with the planet itself. First, inequality. There's always been inequality in society. There are people who have more money and less. But in the Western world, over the last 40 years, in countries mostly focused with capitalism and some form of democracy, the wealth has just accumulated even more. So about 1% of the world owns 45 to 50% of the wealth. And it's gotten much worse in the last 40 years. It's not just that there are rich people, it's that the middle and lower classes had almost no economic gain. And that was not true in the early 1900s, late 1800s. We started to see a stagnation. And just in the last couple of years, the world's billionaires gained trillions in the marketplace while the pandemic raged on. And every company has a role in this of any size, because the choices we make in business about the opportunities we give people, the kinds of people that we give jobs to, the diversity, the inclusion, the wages, are we seeking living wages throughout our value chain? They help reduce inequality. Second, climate is really the biggest challenge humanity has ever faced. It is an existential challenge. It's what the UN General Secretary called recently Code Red for humanity. The science is what the scientists are now calling unequivocal. It is known. Humans are causing this. It's causing rapid change in the planet, and it's incredibly dangerous for us as a species. We live and grew and evolved in a range of temperatures, and we're moving the planet out of that range. And every company has a deep role in this through the choices they make about their operations and how they power their business, about their logistics, about the products they make. Do those products help reduce energy use? Do they help companies and their customers actually become more sustainable? And then third is really a very hard thing to get your head around, which is this web of life that we are all a part of, that biodiversity on the planet is going down quickly. Climate change is the main reason, but our expansion as a species to cut down natural lands, to build our own homes, to build our farms, to cut down for crops, we are seeing a level of extinction that hasn't happened maybe in tens of millions of years. And again, we make choices, the land use of our own businesses, the supply chain in particular, the way we source things. And this is very dangerous. We don't know where the tipping points are. We know that we're on path on climate change right now, that we will lose probably most, if not all, of the coral in the world. And that's just one example of a system, an ecosystem that will be in decline and maybe disappear. And it's not just something that's nice to look at when you're scuba diving. It actually plays a role in coastal protection and providing some protein to something like 1 billion people through coastal reefs. So this matters, and it affects business and humanity. Now, if we stop there, it would be pretty depressing, but there are things that are moving in the right direction at almost exponential speeds, and the opportunities are growing. The clean economy, renewable energy mainly, but all technologies that make things more efficient, lower energy, more water efficiency, they're all growing very fast, and the prices are dropping. Companies are buying more renewable energy now than ever, rising at an exponential rate. This is companies buying renewables directly, not the utilities, or the government providing energy. And companies are buying something like 25 gigawatts a year, which is 25 large nuclear plants in renewable energy. And the reason is actually not some pursuit of a sustainability plan per se, or in reality. It is fundamentally because it's cheaper. And the bank Lazard has done this analysis every year of the cost of building new energy. Solar and wind have come down so far. I mean, solar, you don't even see the top of this chart from 10, 11, 12 years ago. It was so expensive compared to the rest that it was, off this chart. They've come down 70 to 90%, so that almost all of the new energy put on the grid globally last year during the pandemic was wind and solar. people don't really realize that the battle between fossil fuels and renewables is over. It's actually been over for a few years. It's about how fast we can convert a grid that we'd spent 100 years building. There's a lot of embedded infrastructure. So it's not just renewable energy. There's this deep change coming to everything we do in transportation and logistics, in the grid itself, in farming, precision agriculture, which allows you to place water and pesticides and things in exact amounts, perfect for the species, in buildings. All of these systems are taking on new technologies. This is a building that uses less energy. It produces more energy from solar than it needs. It's a net positive building. And we will need data on all of this. The role of information technology, of CIOs, of the technology arena will be incredibly high. So that's an unbelievable opportunity across many sectors. The story of the opportunity of sustainability is also getting clearer. There are a number of dimensions where sustainability, or ESG, is paying off. It is outperforming. So there's a list from a group called Just Capital where they rank companies on how much they serve stakeholders and how much they're prioritizing a larger view of their impacts on the world. And they've taken the top 100 and show that they use twice as much green energy. They emit far less emissions. They pay their workers 18% more. They're more likely to have done gender and ethnicity pay equity analyses, and they're much, much more likely to set diversity targets. They give more to charity. They do all of these things that we call sustainable. And in return, they are seeing a 7% higher return on equity and 56% higher total shareholder return over the last 5 years. Now, this isn't proof exactly. There's a lot of correlation and causation, but in general, the sustainable companies are outperforming, or at least not doing worse, right? There was this assumption for years that somehow it would hurt business, and I think that's really dated. It's not true anymore. So the fact that this is good for business is one great driver of the movement this way. But the reality is there's so much pressure building on companies from the natural world, from stakeholders in every way. So the investor community has started to push pretty hard. So Larry Fink runs BlackRock. It's the world's largest asset owner. And he has said repeatedly, year after year, for about 5 years, in a letter he sends to the CEOs of the world's largest companies, that they have to look at ESG. They have to look at climate. And he said most recently that there is no company, no business model that won't be affected profoundly by the movement to a net zero economy. And the banks are putting serious money into sustainability. In just 1 week this spring, these 4 giant banks committed from $1 to $2.5 trillion to their sustainability investments, meaning real money going out the door to fund renewable energy and efficiency. And then on the social side, they'll fund affordable housing or things that reduce racial disparities. And in the direct equity investing world, about half of all assets will be called sustainable or ESG by 2025. None of these definitions are perfect. There's a lot of pushback now about what does it mean to call it a sustainable investment, but it's working its way through the system. This is where the entire investment community is going. Second, there's just a base pressure on how we make things in the world. There's only so much stuff. I gave a talk a few years back at the World Copper Conference in Santiago, Chile. I learned a lot about that region. Chile gets more sun than any place in the world per meter, just about the cloud cover. And it's why there's so many telescopes in Chile. So it was just fascinating for me. But I learned a lot about copper. And over the last 10, 15 years, the amount of ore of copper in every ton of rock that they bring up has been dropping, something like 25% reduction, which means it takes more energy. It takes more effort. Takes better technology to get the same amount of copper out. So they're using more and more energy. This is not sustainable. They are moving increasingly to solar and renewables to be able to do this. But it shows why we're hearing so much conversation about circular economies. How do we bring things back? so we don't have to keep drawing down virgin resources. And it's easy in the technology world to say, well, how much resource pressure do we put on the world? We are not a big manufacturing industry. But I think we're starting to learn that the technology world has its own footprint. So there was an advertisement a few years back. It happened to be from HP, and I've used this data before, where they ran this ad and said, here's a list of the top 10 countries that use the most energy and power. The big ones are obvious: China, the US, Russia, India. And then they skipped number 5 and said Japan, Germany, Canada, France, Brazil. Great, huge energy users. But their point was a different one. Number 5 was the cloud. And this is a few years back. They said the monthly bill for powering the cloud was over $6 billion, and that we would need multiple power plants every month to keep the growth of the cloud going. So I always say the cloud is not that light. It's actually got a heavy energy toll, which is why the big tech companies are doing so much on renewable energy. So this is something to keep in mind, that technology is the solution in so many ways, but also has its own footprint to manage. There's also this pressure building, really from business to business, on supply chains. And this is where so many in procurement have an opportunity to use both, what they call carrots and sticks, the things that are positive reinforcement and the things that have some penalties. Salesforce, the big software company, started something this year where they laid out a new contract. They didn't call it a contract, but it's written exactly like a contract with their suppliers, and said, from now on, you need to hit certain climate targets. You have to show that you're reducing your emissions. You've got plans in line with science. If you're not on that path, you're in breach of this agreement, and we will charge you more. We will actually penalize you if you're not doing what you need to on carbon. So that's kind of negative pressure. There's really innovative things happening on positive reinforcement. So Tesco, big supermarket chain, and the Bank Santander have created a program for Tesco suppliers where those who have better performance on ESG and on climate will get better loan rates, better financing rates to invest in the things they need to become more sustainable. This is giving them more capital. And then companies are just starting to be even more clear than either of those, and just say, you have to do this or we won't buy from you. Porsche is one example in the auto industry that said all our suppliers need to be buying renewable energy. So this is a chance now, and a chance for all of you. I know so many of you are in procurement or related to it, to move sustainability from something that's nice to have to a demand, a requirement. And there's a really unusual situation right now, in a way, where you have a supplier asking you to ask for more. They believe they can fulfill at a higher demand to some of these demands, and they want to do it. That's a great opportunity. There's two more forces that I think are maybe the most powerful. And one is the drive towards transparency. This is also data-driven, but it's also a mindset where people now expect, when they look at products, to know what's in it. What's in this product? What does it do to me and my family? Were the people who work on it paid a living wage? What's the carbon footprint? What's the water footprint? These are the kinds of questions, and it's called the clean label movement in consumer products, but it applies to a lot of categories. And McKinsey did a study of younger consumers, and they believe and that the ethics of a brand is tied to its network of partners and suppliers, that the actions of the whole value chain have to match the ideals, and the ideals have to move through the whole system. So there's more and more transparency, especially around labor issues in supply chains, and that affects electronics, about where does electronics come from, who's making it, where does it end up at the end of life, is it being taken apart by kids, is it being handled safely? These things are coming out more and more. And the pressure, again, is coming in large part from younger generations, but from everyone. But the younger ones, the millennials, who are now, about approaching 40 at the oldest, and down to like 25. And the Gen Z, the teens and college kids that are going to be coming out into the workforce. And I have 2 teens that are definitely Gen Z kids, and I can see the attitudes are different. This is about half the global workforce now, and will clearly be way more than half as the boomers retire. And their views about the world and about the purpose of business are different. They have said, millennials in survey after survey say they already have not taken a job if it doesn't share their values, or they plan to take a job that shares their values. And Gen Z globally has said, almost all of them, that a company has an obligation to solve problems, environmental and social problems, not just profit. So what does this all mean? It's a lot of pressure building on business. And I think, in short, the expectations are rising, and it's really about the story that companies tell through their actions, through their products. We all tell a story. Every brand is a story. And there's a need in business to kind of step up. As Tim Cook from Apple has said, we have a moral responsibility to help grow the economy and jobs, to contribute in the countries that we do business in. It's a business and moral responsibility. And I think the word responsibility is the more important one than moral. And other CEOs have said many things like, our jobs now include driving what we think is right. This is about trust and relevance and purpose. What is the purpose of our business? And one CEO that I saw a quote from recently said, at this moment in history, and from this point forward, companies will be judged by more than the profits they generate. They will be measured by the value they create for society. And that was actually the CEO of HP in the latest sustainability report. And the company has this vision to be the most sustainable and just technology company in the world. It's a good goal, right? There's a lot that needs to happen to back that up. But I think a company with that goal needs the support of its suppliers and its customers and its employees and everyone to try to reach that goal and to hold them to that standard. That's what stakeholders do. And I think the pandemic really accelerated this need and this pressure. So companies found themselves in a new situation. Their employees were at risk. Their businesses were maybe shrinking rapidly. And many stepped up to do what they thought was right. The medical device company Medtronic shared the design of their ventilators so that companies like Ford or Tesla could manufacture them. They just opened up the design, right? It shows you that sustainability increasingly is about the role in society. And really, it's a fundamental question. Who are you? Who do you serve? Who are you really serving as a business? And this story that you tell about that, I spoke to the CEO of a big beverage company, and he said that a good product used to be one that was safe and tasted good. And that was kind of it, right? As long as it didn't really hurt anybody, it was a good product. And he said now a good product is one that is sustainably manufactured, sourced, distributed, used at every dimension of the product's life cycle. That's a much more complicated business. I think it's a much more exciting one, a much bigger opportunity. And I was at an event like this a few years back, live, before we all went virtual. And it was a company and all their suppliers. And the head of procurement stood up and said, look, a preferred supplier used to be one that hit our quality, our price needs, and the payment terms. That was kind of it. He said, now, if you want to be one of our preferred suppliers, you need to help us with sustainability, with our carbon footprint, with the innovation that allows us to reduce the carbon footprint for our customers. We need information to tell these stories, and we need action. And so I think the role of the CIO in a company is increasingly critical, right? To gather this information, to have good data on the operations, on the supply chain, on where the products and services go and how they're used, to tell this story. I think the CIO can play a big role in marketing and sales and in branding in a way that maybe they haven't before. It's a real opportunity. So my job in the world, and I'm describing what I think is potential for the CIOs of the world, my job is in a way not to be the hero. I think we are facing enormous challenges. there are dragons circling, climate being the big one, but inequality, water use, so many issues. And my job, in a way, is not the hero; it's the sword. I'm trying to provide people with the tools, the stories, the inspiration, maybe some humor, something that gets people thinking about what's possible. And part of what's possible now and needs to be is what I and others are calling being net positive. And what does that mean? Why? Well, the problems we're facing are large, so we have to go bigger and much faster than we are. This is a picture of the world's largest solar field. We need a lot of these, right? There need to be thousands of these around the world, and it can sound such a big goal. But again, we built a system of energy and transportation around the world that is of that scale. We can match it. We can go faster. It's not enough anymore to just be a little less bad, to have incremental goals. The problems are too big. So I have a new book coming out in just a couple weeks that I co-authored with Paul Pullman, who was the CEO of Unilever, global brand company in 190 countries. And really the company of public companies in particular that was and continues to be ranked by experts as the most sustainable, or the company that's trying to do the most. They've been ranked number one in one survey for 11 years. And so we said together, we need now companies to go faster. We need companies to build businesses that improve the well-being for everyone that they touch at all scales, every product, every operation, every region you operate in, every stakeholder, employees, suppliers, communities, customers, and then think about the stakeholder of the future generations, and the planet itself. Now, this is a North Star. This is a goal. There's no company that's here yet. But why wouldn't we want this to be the goal? Because if you flip any goal on its head, you say, if we don't have this goal, then we're accepting that we have a negative impact, that we're causing damage. That doesn't make sense, and I don't think it's going to be good for business. And when we lay out what we believe are the core attributes of a net positive business, there's 5 things that I think really separate it from a good business, or one that's trying to reduce impacts. And at core, it's about ownership, responsibility for your extended impacts, intended or not. What happens when your business is out in the world and your products are out in the world? What does it do to people and planet? Second is taking a very long-term view of creating value. It doesn't mean sacrificing short-term necessarily. There are trade-offs at times, like there are in any investment strategy, but it means getting off this cycle of thinking that quarterly earnings is the right measure, or even sometimes a 2-year hurdle rate for a capital investment. Why? That's arbitrary. Why was that picked as the only time frame? There are investments that have impacts on a business over many years. The payoffs could be longer, and they probably should be. The focus of a net positive company is also on all stakeholders, multi-stakeholders, serving those communities and employees and customers, and then serving shareholders. The shareholders should do great, but it shouldn't be the primary focus. It needs to be a result of doing the work, of doing good work for your customers, solving a customer need, making your communities and your employees happy. And then finally, what's critical in all this is the problems are so big that we need partners. We need transformative partnering across value chains. So companies with their suppliers, or with their customers, or with the government, or with civil society, all of it. So I want to talk briefly about the ownership, because that is so core to this. And we have a model in the book of circles. It's a typical model in business of what's your focus. And I'll zoom in on this, but the idea is that you can start with, in any topic, kind of the core within my business, within maybe the 4 walls of my business, but that increasingly companies are focusing on larger and larger impacts. And we're trying to push that discussion as far as possible. So what people call in the carbon emissions world, the greenhouse gas protocol is a set of kind of rules that most large companies follow now for defining their emissions. And there's really 3 levels. There's direct emissions on site. There's emissions from the electricity you purchase from the grid, which is not really much in your control. And then emissions from the supply chain and customers, really the whole value chain. And this is, scope 1, 2, and 3, they call it. So we said, let's think even bigger than that. And not just about carbon, but just the impacts broader. And there's a number of people who are talking now about, well, what's the bigger impact of the choices you make as a business? There's sector emissions, which is why we're talking about circular and regenerative business models. It has to be done really as a group. You can't really do that alone to address the larger impact. There's, at a larger level, the policies that we support as a business. What are we advocating for? Are you helping governments pass legislation that reduces carbon and charges for carbon so that we move the economy away from it? And at the very biggest level, what's the role, say, of a consumer products company in consumption as the focus of business, or how dependent we are on fossil fuels? So you can do this kind of analysis and thinking for something like carbon, something like a direct impact, but also on the social side. So let's imagine we're a food company, and we might start with employee safety in all our facilities, of course, at the core. Employee well-being, how healthy are they? What is their life like? But as you extend your view, you get to things like the food and farm worker safety and well-being. How safe are they on the farms? How much are their communities thriving? Right? Are they making living wages? What policies are you supporting so that there is more focus on what's called, say, regenerative agriculture, where carbon is sequestered in the soil and it actually reduces the greenhouse gas problem? Or policies that improve nutrition and help bring nutrition to the people that need it, or reduce food waste, one of the biggest problems in the world that wastes more energy, more water than really anything else. We throw out something like 40% of the food. At the largest level, we're going to need to feed 9-10 billion people. How do we do that? How do we satisfy hunger within the thresholds, the amount of water, the amount of climate that we have to do that? This is the kind of thing that the food sector should look at. The larger question is, what problems in the world can you help solve? How do you think of your business in a net positive way? And one of the businesses in Latin America that is one of the small handful of real leaders is Natura. And their products for a long time have had organic ingredients. They know the sourcing. They think about the livelihoods of the people. But they've set visions in line with what we're talking about. Their vision is a commitment to life and thinking about how they impact the people and planet in all that they do. The goal is that someone buying a Natura product for their self-care, for their personal care, is actually helping improve things by doing that. That's the goal. Okay, so how do you build this kind of business? There are different levels. And I think at the core, you have to start with some vision and some purpose. And we could spend a lot of time on that. I mentioned before HP's purpose of being the most just and environmental company in technology. There's a lot of companies with great purpose statements. And that's a core process to go through. What is our purpose? What are we trying to do in the world? At the more tactical level, there's just setting really big goals. And the Sustainable Development Goals were developed in 2015, the same year as the Paris Climate Accord. So it was kind of a big year for moving the whole discussion. These are also called the Global Goals. There's really 16 categories, and then kind of a 17th about partnering itself, about how we get there. And this is really a roadmap, a business plan for what a thriving world would look like. You want to get to a place where there's no poverty, there's no hunger, right? We've tackled climate change. We are providing good jobs. There's opportunity for women, and on and on. We can do this, right? We have solutions to pretty much every problem. And the biggest companies in the world, and now increasingly smaller ones, are setting goals along these lines. They're looking at the global goals. Almost every one of the 500 largest companies in the world has goals in these areas, on carbon, on social agenda. Over 1,600 have a science-based target now for carbon in particular, and there are dozens and more every day with that kind of net zero target. And the leading edge of this, and it's important, I think, for companies to know the leading edge because it always pushes what's possible and what's expected. Couple tech giants early last year did push the agenda. Microsoft said, we are not just going to be carbon negative or neutral by 2050. We want to remove from the environment all the carbon we ever emitted since we were founded in 1975. I had never seen any company kind of say that. They wanted to be retroactively neutral and basically take responsibility for everything they've done to the world, good and bad. Google also has very aggressive goals like this. They have one that's pretty tactical and interesting, which is to say, we want by 2030 to be 24/7, every minute, to be powered by renewable electrons, fundamentally. Nobody knows how to do that, because what that means is on site, you're making solar or wind, you're storing it in batteries, maybe you have a microgrid, and if you're plugged into the larger grid, that grid has to be entirely renewable. So they're getting involved in the systems around them. It's driving innovation and partnership and systems thinking. That's what we need. And this is happening across sectors, where not only are they setting science-based carbon targets for themselves, they're setting them for their suppliers. In pharma, in retail, in technology, you're seeing these aggressive goals to be neutral by 2030, 2040, 2050. And what's changed in the goal-setting arena in the last few years is that the social goals were pretty much entirely qualitative. They were just statements about wanting more equality. And what you're seeing now is about a quarter of the world's largest companies have some quantitative goal, a number, like this goal from Woolworths that says on gender pay parity, we want 40% of our executive positions to be women, and there will be no gap, no salary gap between men and women at any level, at a per hour rate, at an annual rate. I mean, I love this one because it has no wiggle room. There's no way out of this goal. You know whether you're hitting it or not. And the next level you're seeing now from the leading companies is goals about everyone in their value chain earning a living wage. So that's part of the process of moving the business toward net positive. We also need kind of new levels of innovation, right? And new thinking. So there's a kind of old story that the big shipping companies, the big logistics companies like UPS, for years now have been using GPS data from space and logistics data, telematics, they call it, to route as efficiently as possible. And UPS, a number of years ago, started doing something kind of unusual. They said in cities that are grids, that are pretty, straight, we will no longer take left turns, because if you're waiting to cross traffic, you're wasting time, energy, money. And so they designed their routes to take right turns and to be able to kind of keep moving. It took many millions of kilometers out of their routes, many millions of liters of gas. Now, this is an efficiency play, but I think of this as a heresy, meaning the kind of question that challenges how things are normally done in a way that's surprising. And there was a meeting at some point where someone said, why don't we stop taking left turns? Come with me on this journey. It must have seemed a little crazy, but the inspiration can come from anywhere. There were drivers suggesting this. There were people in finance. It was bubbling up through the organization. One of the heresies that companies can ask is, how do we deliver our products? So Philips Lighting has managed services, meaning they will provide you lighting rather than the bulbs themselves. They will manage your lighting needs, and that allows them to build a more circular model. They'll take the bulb out when it breaks or stops working, bring in the next generation. They have the incentive then to reduce costs, to provide it as a service. Why can't a product be a service? That's fundamentally what HP's management of printing is, right? It's a service that incentivizes everyone in that system to reduce the footprint and provide the thing that you need, which is lighting or paper and printing, without buying that thing itself. And that's an amazing model change, I think. Okay, so that's the kind of changes in the business. There's, at core, as I've said, you need to be looking outward at partnerships and partnering with companies that help you get to your sustainability goals, that help you embrace them. Partnering with your industry and peers. In consumer goods, there's been companies partnering to find new refrigerants for cooling things, or they have agreed on shapes and sizes of pallets for delivery so that everyone can pack trucks tighter. It's just efficiency, right? It's just better efficiency as a unit. They're trying new ways of delivering products. There's a bunch of competing brands working with something called Loop in a bunch of cities, testing around the world, where as a consumer, you get a box with the products you love in a few different size containers. They're all shared. You put them back in the box when you're done and send it back, and they clean them and reuse the packaging. It drastically reduces packaging. So they're asking, hey, why can't we reuse packaging? It's kind of a heretical question. Or across sectors, trying things in retail, why can't we have stores where there's bins or there's, things delivering, say, soap or shampoo in something that looks like a soda machine? You bring your own container. Why do we need packaging at all? There's companies working closely with communities and NGOs, and Unilever, that I've gotten to know well, has done more than maybe any. And they have really probably the largest kind of campaign with NGOs in the world about hand washing, using their brand Lifebuoy soap, where they are teaching kids to avoid easily transmittable diseases. This sounds like philanthropy, right? And it does have an element, but it's been a huge innovation and growth driver for the business. They realized that kids couldn't sit still for very long, and some of these places don't have a lot of water. So they designed a soap that instead of 30 seconds of washing to kill germs, does it in 10 seconds. And they had the color of the product changed so kids knew when they were done. This has driven more sales. Lifebuoy soap was stagnant for 100 years, and it's growing faster now in double digits. They are growing as a business and in the good that they do. That's okay. It's okay to have both. And then finally, in partnership, there's a great story around palm oil, which is in almost every product you can imagine. And it's a very complicated system. They cut down more land in Indonesia and Malaysia for palm oil than anything by far. And it's been complicated and very difficult to solve. And what's happened in the last few years is there's finally progress, because everyone's at the table, the big buyers, the local farmers, the communities, and they brought in banks and financing to help farmers transition to better species, more productive methods, so they don't have to cut down more forest. This is going on in palm oil in Indonesia. There's work going on. HP's involved with work on in the Amazon, which is mainly driven by kind of beef and soy. This kind of work of full systems is how we get to healthy forests and animals and a healthy business for farmers. This is how we build a thriving world. And that's what this is about. Business cannot thrive unless people and planet thrive. So I ask you, how will you make procurement more sustainable in a very specific level? How will you be net positive in your life and in your business? And how will you be the hero? Because the answers to those questions determine our fate and whether we thrive together. Thank you so much. Muchas gracias. And I'll take your questions. Thank you.